Okay, we need to say a couple more things about the $25,000 special allowance to make it clear. First of all, in its simplest terms, the special deduction, this $25,000, is going to be equal to the excess of the net losses from passive rental real estate over any other passive sources of income. So first of all, you have to take the passive sources of income, net those to zero, come up with the total passive loss from rental real estate, and that is the amount that's eligible for the $25,000. So it might be more or less than the $25,000. Okay. If the eligible amount goes above $25,000, the excess passive losses don't evaporate. They're carried until the day you have a disposition, and then those losses are recognizable at that point. But you have to be careful about the grouping election rules. You need a disposition of all the properties in the group to set free that loss if you made a grouping election. What's also important to make clear here is you don't get this $25,000 unless you actively participate in the rental real estate. Now, there's a big difference between active participation and material participation. To be a real estate professional, you have to materially participate. To get this $25,000 special allowance, you only have to actively participate in rental real estate. And as I'm going to explain shortly, these are two different hurdles. One's a lot harder to get over than the other. Okay, active participation is a lower standard than material participation, and thus is much easier to establish. Material participation requires regular, continuous, and substantial involvement in a real estate activity to qualify as materially participating. To actively participate, the taxpayer need only genuinely contribute to the activity in a meaningful way, much lower standard. In this context, some of the activities that wouldn't qualify to meet the material participation standard will qualify to make the active participation standard, like managerial decisions such as selecting new tenants, deciding rental terms, approving rental expenditures, etc. That'll suffice to actively participate. You will not be considered to have actively participated and then won't qualify for the $25,000 special exemption in the following circumstances. If you own less than 10% of all the interest in the real estate activity, you won't qualify. Or if you're a limited partner, you won't qualify. Lastly, if you're renting your real estate under a net lease agreement, you won't be deemed to have actively participated because by definition, the tenant is responsible for the costs and maintenance decisions of the underlying property.